Yo, what's up you guys? Welcome back to a new video. Today's video, I want to give you guys an update on the NFP data and how it's going to affect the market. We're also going to take a look at DXY, gold, the Nasdaq and Dow Jones from a technical perspective there as well. If you're new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. Then if you do enjoy the content, please do consider smashing that thumbs up button and let's try and get this video to 100 likes, my good friend. Don't forget about the NFP, not the NFP, I don't know why I say NFP, but the HFT system that I'm giving away to 2 lucky winners. Make sure you sub to the channel and you do follow the Instagram Wealth Creator page there as well. Now, without any further ado, let's jump straight into it. Right now, if you've been here on this channel long enough, you would know that how information is basically distributed, right? First, we have what's known as the CPI. So basically, if CPI comes out higher, which it did the last time that it came out, then basically what that means, the Fed is more likely to hike interest rates, which is what they did yesterday, Wednesday, with 1/4 basis point, right? So well done, Fed. You followed what you were supposed to do. Now today we get a jobs report that had basically came through a little bit confused, because why? If we look at it in this way, right? So if we look at the report that got released today, right? Let me just go through it very quickly. Okay, so it says here that the expectation was 181,000, right? Now last month they added 165,000. That means they're obviously up a lot, because they came through at 253,000. Where is this jobs coming from, right? And then the unemployment rate once again came down, because it went up last month and then it comes down. Now the reason why this data is so confusing, but we obviously have to go with what the market is giving us. However, we do have CPI data to look forward to next week once again, and I'm very excited to see what that's going to look like. The reason why I say the data is confusing is because that when interest rates goes up, that basically means consumers are hurt, right? Because that means when interest rate increases, that negatively impacts the consumer to spend more money on companies that generates a profit through consumer spending, which is the CPI. Now, if consumers are so deep in debt, then that means they are still spending more, which is what the CPI data said. And even with higher interest rates, companies are still able to generate new jobs. Now the question is, we don't know where these jobs are coming from, but we always have to be reactive and not predictive, and we must always move as the market tells us to go. That is why we don't trade buy stops and sell stops in the market. Instead, we wait for the data to be released. However, this that I'm looking at the moment also does seem to be setting up for more bearish continuation on the dollar index, but we will get there once we've gone through the fundamental information. Please let me know down in the comments below what your thoughts were of this jobs report, obviously based on your experience, and let's have a debate on there. Okay, first article coming from CNBC says jobs growth totals 253k in April, beating expectation even as the US economy slows. And that is exactly what I said. The only difference is I don't have money to go and write an article. Now, key points over here says the NFP went up. We know that unemployment came down because they expected it to go up, but it came down. I don't know where Paul's getting these numbers, but that's fine. The average hourly earnings also increased, which is something we would like to see in South Africa, Mr. President, if you're watching. And then obviously we're going to run through all of this information here very quickly. So it basically says your professional and business services led to the job gains with an increase of 43,000, and then 40,000 was added by healthcare, and then hospitality and leisure income also added 31k, and then social assistance basically added another 25k. Okay, that was just the notification for load shedding again. Okay, it says here, despite serious banking industry troubles, jobs in finance increased by 23,000. Now this is what I'm saying, right? The data is so confusing that if you have spent a lot of time dissecting the US economy, you'd know that they're on the brink of a recession, right? And then they come out with these positive numbers, and you ask yourself, why isn't these things happening in other countries there as well? Is these numbers even real? Because nobody can actually put it down on paper, because it's being given to the public to say, this is the data that we have. This is what the data looks like through the ADP report, through the unemployment claims report. They compile all that information and they send it through. But who's the person who has got that data, the actual data, to say that this is how it's supposed to be? It says here, rising wages have helped pressure prices. Powell said a 3% annual wage gain is probably consistent with the Fed's 2% mandate. So they're not saying much, right? So they're not saying too much there as well. We obviously now know that the index is set to possibly continue a bullish continuation, not even a bullish continuation, because the index were still basically, I almost said locked at 60 frames per second, but it was basically locked within this consolidation phase, right? Again, I always advise people to not just go with positive data and go, okay, I'm going to trade this breakout. No, it's always very important to wait for more proper confirmation. It says here for the stock market, it says here Dow futures rise 200 points is Apple, and PacWiz gain. Live updates again. If I look at the Nasdaq, I don't really see these gains. Obviously, it says here futures rose even as April jobs numbers came in hotter than expected. The US economy added 253,000 jobs, while Wall Street had expected 180,000 new jobs there as well. And you can go and read this entire article, because I really don't want to read too much into it, because the way I interpret and read data is just by looking at numbers, and I make my own sums, and at the moment they're not making sense there at all. So we're going to go here on the monthly time frame when we look at the index. Right now, the index is definitely set to go and hit pandemic levels, right? This bullish continuation here was created when the Feds started hiking that interest rates last year. For the lateral part of last year, we're in 2023 now, so it was somewhere 2022 at the red candle they're basically around this level over here. A further move is down for the index as anticipated. The only problem is now we are stuck between whether we want to buy or whether we want to sell, because why? The market is basically stuck between this level of resistance and this level of support. Now, you can't get into this market and just say, maybe if you're a short-term trader, then you're more than happy to go in there and go crazy. Because if you look at gold's also reached this level now for the third time, so that's giving us some breakthrough vibes for new highs there as well. So based off the NFP data, what's my anticipation here? I personally do see the index still moving lower, but again, we'll obviously have to adapt to the market as the market changes in any case. On the weekly time frame, as you can see, support's been holding better than some people pay child support. We can see support's been holding. We cannot be looking for sells, although I would like to sell the market, but we can't be looking for sells in a market like this. However, we got an impulse. After an impulse, you expect a correction, and if you take your Fibonacci from the low to the high, what we have over here is we got a market that had not pulled back yet, even to the 0.382. Now, again, we could potentially see a pullback to this level based off the positive NFP data. We also now know we've got CPI data coming through, on Wednesday. So between Monday and Tuesday, we could ideally see the market start this pullback. If we go down on the daily time frame, what do we have here? So on the daily time frame, like I said before, is we basically had the index that was basically just going sideways. So obviously now with the positive NFP data, there's obviously definitely a move for the market to continue higher. It's going to be a challenge for us to get there. The first structure we need to take into consideration would be this one over here. However, I also see the market printing this potential head and shoulders pattern, which is considered a bearish pattern from a technical perspective. In order to avoid this, we then have to wait for the market to give us a clear break above structure. All of this was acting as resistance, broke above that, tested it as support, support did not hold, market broke below support. We need to wait for a clear break above support, then resistance, and then wait for the pullback, and then all of that support would be then, all of that resistance would be then turned support, and then we could have to start looking for a longing opportunity there as well. Now gold over here, as we can see, already setting up for a nice buy, but gold's definitely going to break out to the upside. We can see here gold's back to test this pandemic level that it had created back in 2020 for the third time now. And you know what they say, third time lucky. Hopefully gold will be able to give us the breakthrough that we're looking for, and I do believe this is basically just to get some sellers involved in the market, and then potentially wipe out all of that orders once again. Clearly gold is sitting at a strong level of resistance, nothing much to see there. And obviously if we look further back, we can see that gold is also, like the index, due to the correlation, still stuck within a consolidation phase there as well. Next up here on the daily time frame, this looks like a 61.8 pullback because it's lining up perfectly with the structure. We got we've got 3 candles to the upside, and if you take your Fibonacci from the low to the high, we can exactly, so we've got to pull back to the 61.8. right now, most people would expect the market to just pull back from this level. I would also expect the market to pull back from this level. It's just very important that you can't just buy the market from this level. So I would say wait for this daily candle to close today. If you do get a close above structure, then I do expect gold to continue higher. Now you can argue with me in the comments, with all of the reasons why you think gold is gonna go higher. I do have to wait for gold to close this daily candle above the structure. If gold does break below the structure, then I do expect gold to continue lower first, and then from there we could potentially start monitoring the price action once again, and I will give you guys an update on the best next probability setup. The Nasdaq was supposed to be bullish because of Apple says, right? Now the Nasdaq has been anticipated to have obviously completed this this overextended W formation to the left leg, and because of that data that we received now, I do anticipate the Nasdaq going into next week just moving slightly higher, and then here on the weekly time frame we can see again, you can see the correlation between all of these guys, and we can also add that gap there that was filled. So we can see the correlation in how it's taking place, because why most of these things that we are looking at had just been consolidating. Now we can see, if you take a look at the Nasdaq firstly broke above the resistance, tested it as support. The market then I'm just going to use this level over here, that high over there, and I'm just going to use this entire level here. Now we can see how the market had been moving basically sideways. Also, if you look at the index that we've spoken about before, that could potentially be the level that we'd want to look at, but just to play it safe, I know some people, I don't want to play it safe. Like someone I saw someone said, some of the best traders, they do they do stack trades. No, I don't stack trades. Well, maybe I'm not one of the best, but I don't stack trades. I trade one position at a time, and I always assess risk all the time. So these are the levels that we're obviously going to monitor for the Nasdaq. However, the bias on this would obviously be to go high, or to go, it would be to go bullish. But like I said, as traders, we have to be reactive and always adapt as the market moves. So that is going to be my first preference, or alternatively a break below this level. We'll just make use make way for us to go to the downside. This anticipation is purely based off the high jobs data or the high job report, because the high job report gives investors the indication that the labor market is doing good, meaning companies are growing. And because these companies are listed on the Nasdaq, that we obviously expect these companies to do quite well. The Dow Jones quickly on the daily time frame is basically holding on to live support. Still got some clearance here to the downside. Now Dow Jones is basically also made up of the industrial, be more on the industrial side. However, again, we have this massive impulse. Now we normally expect to pull back to the 0.382, and again the Dow Jones is basically holding on to live support. Now we can't look at the Dow Jones the same way we're going to look at the Nasdaq 100, but what I can say is if this daily candle does close below this structure, we can definitely start looking for sorting opportunities. If the daily candle does close above this structure here, then we do expect the market to continue higher. In doing so, will the market also give us a small inverted head and shoulders? Alternatively, that would be a correct head and shoulders, but this would basically be the break above support that got broken, that turned resistance got broken. All of that resistance would be then turned support, and then we obviously have to monitor price action on lower time frames, apply the rules of the strategy or the system that you use to look for a possible entry. Now guys, that is it from my side. I hope you have a beautiful weekend, and if anything does change, please I'll give you guys an update. If you have any ideas of any videos you'd like for me to do, or any questions that you'd like for me to cover, please let me know down in the comments below. That's all from my side. Thank you for your time, and as always, cheers for ears.